Here's the question of the week. Should I pay my 0% car loan early? I was able to snatch a deal on my car back in 2020. I have a 0% interest rate. Shall I pay it early or let it ride? What they're referring to is when you buy a car and finance part of the cost. You borrow money from the bank or other lender who charges you a percentage interest rate to borrow the money. Sometimes car dealerships offer a 0% interest rate loan as an incentive to buy a car with them. If this is the case, I recommend holding on to that loan or keep paying the minimum car payments as long as you can stay with a 0% interest rate. But as a warning, check the terms of the loan. Don't get caught with a sudden interest charge and an inability to pay off the loan down the road if something depletes your cash. But is a 0% interest car loan free money, or are you paying for it somewhere else? With a new car, you're paying a premium for what feels like a premium experience. According to data from the National Automobile Dealers Association, the average person owns 13 cars in their lifetime, each car costing an average of $30,000. That's an average of $390,000 invested in a single person's lifetime of driving. How much could you save if those were 13 used cars instead of brand new cars off the lot? If each of those cars were 3 years old instead of a new car, you could save nearly $130,000 during your lifetime. That's a massive amount of savings. It could pay for a lifetime of car insurance, it could be a down payment on a house, or even pay some or all of someone's college tuition. In today's dollars, that's over 28,000 gallons of gasoline. And today's average miles per gallon, that would be over half of the gas you would need to use in your lifetime of driving. The number one reason you should buy a used car is depreciation. Depreciation is when an asset or something you own loses value over time. Owning the average new car for 3 years depreciates its value by $15,000 or 50% of its starting value. Owning the same car after it's 3 years old only depreciates it by $5,000 or a third of its starting value. You have to weigh the cost of that new car smell. Is it worth paying an extra $10,000 on average every time you make the decision to buy a new car? It doesn't feel like you're overpaying for that much when you go to the dealership, especially if they're offering attractive financing incentives or special service packages. Don't be fooled by buying the marketing. They're selling you a brand new product that they wouldn't even buy back for close to the same amount of money as soon as you drive it off the lot. The number 2 reason you should buy a used car instead of a new one is the overall trend in reliability. Cars are at an all-time high in dependability. 100,000 miles is a healthy benchmark before needing any major repairs. Even regular maintenance, brakes, tires, they last more than they ever have. You always want to shop around and get multiple quotes when getting repairs. Don't just go back to the dealership. Looking at this chart from J.D. Power, the top 5 brands in dependability are Kia, Buick, Hyundai, Genesis, and Toyota, in that order. Growing up, Toyota Camry and Honda Accord were the gold standards in super reliable vehicles. But Kia, Hyundai, and Genesis, they're all different brands produced by the same company, Hyundai Motor Group. That kind of dominance cannot be ignored and should be consideration if you're currently looking for a reliable new vehicle. The number 3 reason you should buy a used car is the cost of insurance. It costs less to insure a car that costs less. But by how much? On this chart, you'll see quotes on 2 Honda Accords, one made in 2013 and one made in 2019, with the same conditions and variables adjusted for age. This is courtesy of Zebra Insurance Services. The bottom line, the used car was $18 cheaper per month to insure than the new model on average. Each year you own a vehicle, the cost to insure it drops 3.4% on average. Over time, these savings can add up to a large benefit. An 8-year-old vehicle is approximately 25% cheaper to insure than the brand new version of the same model. In the example above, that would be an extra $74 per month in savings just to insure the vehicle. You can also drop collision and comprehensive coverage, the parts that pay to repair your car, with less stress and save even more money. Make sure you still have a healthy amount of liability insurance and potentially an umbrella policy, especially if you have teen drivers. The fourth reason to buy a used car instead of a brand new model is the overall reduced stress. Aside from variables like warranty or buyback periods, the upkeep for a used car costs less. It is easier to find qualified maintenance and parts for used cars, and when you get that first dent in a brand new car, it has a greater negative impact on you psychologically than a used car. If you've ever been underwater on a loan, you probably want to avoid that at all costs. This is when you owe more on the loan than the asset is worth, as shown by the graph here below. Car value is shown with the blue line as it depreciates quickly, and the amount owed is the outstanding principal on your loan. All the way up until 7 years, you're seeing a car worth less than the amount owed on the loan. What if your car gets totaled in a wreck or is stolen? If you're upside down on your loan, you could end up getting less from the insurance claim than you owe on your car loan. The fifth reason to buy a used car instead of a brand new one is the upgrade perception. Your initial enjoyment when buying a new car will diminish over time. The more exciting the purchase, the quicker you arrive at what economists call the point of maximum potential. Add in scarcity or a delay in gratification, such as waiting lists or supply chain shortage, and you're adding to the roller coaster spike of your overall enjoyment with the product. When you save 30% or more buying a gently used car, you have more room to expand into a more luxurious model with each upgrade. Having the absolute most expensive model you can access from the beginning loses its impact faster. The only improvement that matters is relative to your own experience. The greatest battle is within comparison to others. Your friends, families, and neighbors may have extravagant features that make you ready to trade in, but remember, it all comes at a cost. I'm a big advocate for buying used cars, but here are some arguments for considering a new vehicle for your next purchase. When going to the dealership, you're open to more financing options. It also becomes dangerously easy to buy more than you need. New cars have the latest and greatest features. With advanced technology, you could have extra safety features, but it also opens the door for more expensive maintenance issues if some of those things fail. New cars can evoke a greater peace of mind, but it's hard to beat the bumper-to-bumper warranty. The savings on a reliable and gently used car often outweigh the warranty value over the lifetime of your ownership of that car. Then there's always prestige. It's difficult to argue against this one. If you're trying to keep up with the neighbors, a new car might bring you that temporary satisfaction and status. This is assuming the average used car, some makes and models hold their value better than others. The first factor to consider when getting ready to buy a new car that's new to you is the upfront cost. Many people use a loan to be able to afford large purchases like a car, and down payment is the money you'll need upfront to make the purchase. A study by Edmunds revealed the average down payment was 11.7%. Conventional wisdom had people typically putting down 20% or more on a car loan back in the day. This shows a trend towards a smaller down payment and bigger monthly car loan payments for the average driver. This is a dangerous increase that will lead to a greater number of vehicles worth less than the debt used to buy them. What's my recommendation? I'm glad you asked. Save up cash and don't buy a car that's more than half of your annual salary. If it seems like an oversimplification, It is. Your needs and situation may make that higher. Almost everyone I speak to can actually spend less and get everything they need and more. If you're financing a vehicle, your credit score is going to play a major role in what is available to you. Remember, a credit score is just a number grading you on your ability to gather and manage debt. The best rates are only accessible with the best credit score, aka an excellent credit rating. There are specific ways you can build or rebuild your credit score to get into that upper range. If you're considering financing and your credit score is weak, you should consider waiting and building up that credit score before financing this major purchase. Buying a new car is not a solution to a poor credit score. There are much cheaper ways to boost your score or also buying a car. You can get pre-approved before going to the dealership and accepting whatever offer they have waiting for you. Remember, you could end up paying a monthly payment for a car that depreciates in value and enjoyment faster than a used car would. The average cost, according to CarMD, was about $360 for a Hyundai with a check engine light related to repair. At the other end of the chart was GMC with an average cost of $362. That's a 16% difference in the cost to maintain a car. Over time, your cost to own a vehicle can increase beyond the value of the car itself. It's important to consider how many miles a car has and how many more it can take without major repairs. A car with 100,000 miles and 10 years of previous ownership will have statistically more maintenance costs than its market value. This doesn't exclude it as an option, but amplifies the point that your car is a utility first to be used and not a good long-term investment or a store of value.